We are being warned today about significantly higher tax bills in the future. The Institute of Fiscal Studies is warning that it is all but inevitable that we have higher taxes to pay, as much as £40 billion a year more by the middle of this decade. So in this video, why we're all going to be paying higher taxes as a result of the COVID-19 cost and what it might mean for your tax bill. I'm Bamford, a chartered financial planner at Informed Choice, and in today's video I'm going to be looking at this new analysis by think tank the Institute of Fiscal Studies, and they are warning of significantly higher tax bills to come, up to £40 billion a year more to pay back in tax by the middle of the decade. And that's clearly a lot of money to pay back. It's to pay back for the cost of the COVID-19 fiscal intervention, so all of the money, the emergency measures the government has been putting in place. And the central forecast here is that the UK economy will be 5% smaller by 2024-25 than it was forecast to be at March this year. So a significantly smaller UK economy in 4 or 5 years' time, and as a result, with higher public borrowing, a much bigger likely tax bill to pay. Now what we really have here is a double whammy, and that double whammy is much higher public borrowing, so money being borrowed by the government to pay for emergency financial support, but also a smaller economy, and that smaller economy means that tax revenue is much lower. Tax revenue is forecast to be about £100 billion lower this year than it would have otherwise been, and that's a significant amount of money. It means less money coming into the public purse, and therefore we have to pay it back at some point. So you add the lower tax revenue to the additional government borrowing of about £200 billion, and all of a sudden you can see that we have an awful lot to pay back at some point in the future. We know that the government has already this year spent an extra £70 billion on day-to-day public services, so extra support for the NHS, adult social care, and also its track and trace service. So lower tax revenue, higher public borrowing, and emergency expenditure. These numbers are adding up to some really big, scary figures. So what the IFS are forecasting today is that public borrowing, net public borrowing, could reach 110% of national income by 2024-25, and that number of 110% compares with about 80% pre-pandemic and about 35% before the onset of the global financial crisis. So 110% of public income, national income, is a significantly big number. Now, one thing we have working in our favour is historically low interest rates, and that means the cost of servicing this debt is being kept very low, much lower than initially forecast. Now, what the IFS is effectively forecasting here is a period of austerity too. So if its central forecast is proved correct, we're likely to have about a 2% lower public spending capacity by 2024-2025, and that 2% equates to around £40 billion a year. And I guess there is a choice here for the Chancellor and for the Treasury to make, which is, do they tighten austerity measures, do they significantly hike tax bills, or is it a combination of the two? So best case scenario does look like higher tax bills for all of us somewhere in the middle of this decade, but not just yet. I think that's worth mentioning at this point. It's very unlikely that Chancellor Rishi Sunak and the Treasury will impose on the public at large higher taxes right now. We are still in the middle of this pandemic. This is still very much short-term emergency response time. It is not yet time to start repaying the debt. At the moment, the government is still taking on additional debt because of its measures it's putting in place to support the economy, to support people who are unable to work, who have lost their jobs. So higher tax bills are definitely coming, but I would suggest not just yet, at least 18 months to 2 years away before we start seeing those feeding through into the system. And then don't forget about the cost of Brexit. We don't yet know what the Brexit deal, the trade deal, might look like, but even if it's a deal of some description, that is likely to cause a hit to the UK economy, in the short term at least, and most of the real cost associated with Brexit is yet to come, whether that's a thin trade deal or a more comprehensive one. So Brexit compounded on top of this higher public borrowing, compounded on top of lower tax receipts, could have a really big impact on the future shape of the economy too. Now, Paul Johnson, who is a director at the IFS, had this to say: "This government has chosen to pump an additional £200 billion into the economy to support jobs, businesses and incomes this year. That is a level of fiscal support unprecedented in peacetime. For now, with borrowing costs extremely low, Mr Sunak shouldn't worry unduly about the debt being accrued as a result. It is necessary. Well-directed investment spending over the coming period could help with growth and hence eventually the fiscal numbers." I think it's also worth noting that the UK is not alone in this. The IFS point out that every major economy in the world, bar China, has seen a significant fall in the size of its economy in the first half of this year. Now, the UK, along with Spain, were two of the hardest hit by this, with the size of their economy in the first half shrinking by about 20%. But also in the likes of the US and in Germany, they have seen significant economic contraction in the first half, down by around 10% each as well. So the UK is by no means a unique case when it comes to this smaller economy and taking on higher levels of public debt. So which taxes could rise in the future to pay back this debt and also overcome this issue of a lower tax revenue because of the smaller economy? It's worth noting that £40 billion a year is about 7 pence on the rate of income tax, and it is very unlikely that any government would put income tax up by 7 pence in the pound. That would be an incredibly unpalatable thing to do. As a result, they're more likely to spread the pain across many different types of taxes, and also with some austerity measures as previously mentioned. So there's lots of different types of tax that could go up in the future, and again probably not immediately, but in a year or 2, year and a half, 2 years. And those taxes would include VAT. VAT is one of the biggest tax takes for the government at the moment, and it would only take a very small rise in the rate of VAT to raise a significant amount of money towards that £40 billion a year. We could also see higher national insurance costs, particularly for the self-employed people. That idea has been mooted before and never really followed through properly, but it's something that's definitely under consideration by the Treasury. We've heard before about the possibility of an online sales tax, and theoretically that one is very appealing. We should tax the likes of Amazon and other online giants who don't necessarily pay their fair share of taxes here in the UK. So theoretically that's a good one. It would be a popular one, but it would likely be very difficult to collect in any real scale or mass. So I suspect whilst that one would be a vote winner and a pleaser of the electorate, it wouldn't be particularly effective in terms of paying back this tax bill. We might also see more in the way of wealth taxes, and that one isn't a particularly Tory measure. It wouldn't do very well with their typical voters, but certainly we could see higher inheritance tax, or possibly some sort of lifetime allowance for the amount of inheritance you can pass on, and after that inheritance being taxed at a very high rate. We could also see higher capital gains tax, which is something that is currently under review. So my opinion here is we're likely to see a combination of tax rises rather than simply higher income tax in the future, although an increase to the rate of income tax could also be part of the solution. Which tax rates do you believe will go up in the future, and do you think that we'll be paying back the COVID-19 debt through higher taxes or through austerity or through a combination of the two? Leave me a comment below. I'd love to hear what you think about this one. Please do like this video, press subscribe so you get future videos just like this one too, and until next time, thank you for watching.